Good evening.
Good evening, sir.
Good evening,
Can you all?
sir.
Yeah, now the time is 7:13. I think we have to start because today the additional note is a little bit lengthy. Within 2 hours, I had to complete that. Right before that, day after tomorrow, the last session, Thursday, last session, we advanced, as I mentioned that day also, we decided to advance to tomorrow, Wednesday. Because I have unavoidable arrangement, some other function on Thursday. As a result, even with reluctantly, it made me to advance it. Rather than postponing to Friday, we thought of having this session tomorrow. Right? I think the CMA has already informed you all. Then tomorrow will be the last session. Tomorrow session, first 1 hour, Mr. Saman Disanayaka will take first 1 hour because he asked for 1 hour to complete his sessions. Then the second 1 hour, we will have the discussion session. Only thing, everybody should participate with more and more questions tomorrow to make it a more effective thing. To make it a more effective thing, it is very essential for you all to come with questions. Ask questions as much as possible. Right. Saying that, the other thing, now we are planning to start the VAT, SSCL and RAMIS batch number 9. I think the date we have to start from 15th of November or something. We have decided a date and now we are starting to advertise that. That is the next batch of RAMIS, SSCL and VAT. So right. Saying that, I'll start today's session. For today's session, I will first I'll share the old note. In that note, in the old note, I did a small change in the last page. I will share this note again, right? In this, I did a small change. As I mentioned that day, I said that there's something to be changed. Accordingly, I changed it, right? Now, this yellow color shaded area in the last page of that yellow color shaded area, I
Sir, we can't hear you properly, sir.
newly. I'll share this note. That's a small improvement. I will share this note again. Sorry. Can't. Note number 1, the page before the last, I changed something. I did a small improvement and temporarily I shaded it with yellow color. I will share this complete note again. Right? Note number 1, 4 days that sorry, I think something has happened to my line.
Yes, sir. We can't hear you properly, sir.
Yeah, that's what. Can you hear now?
Now it's okay, but time to time it came.
Right. If this issue is continuing, I will change the connection to another line. Right. What I said in my detailed note, I change small in the page before the last. This is the amendment which I have done. Right. The yellow colored, I shaded it. I will share this note again later. Right. Saying that, I'll move to today's session. I'll close this. I'll share the new note. Can you all see this note? Can you all see this note?
Yes, we can.
Yes.
Yeah.
Anyway, in my communication, if there's any issue, please inform me. Then I change the connection line to another line and try. I think maybe due to this rainy situation, there may be disturbances in connection. My area, little bit rain is there. Right. Now, this is the additional note, which I have prepared for further knowledge sharing, because out of the 8 days, I managed to finish off the balance part within 7 days. Therefore, I prepared another note covering some tax administration matters. I shared this note, even it's not 1 or 2 places, I change a bit subsequently. Therefore, I'll be sharing this note again. Right. Now, in this note, we will discuss some important points with relate to income tax administration. Right. Now, under income tax administration, if you take the Inland Revenue Act, almost 50% of the Inland Revenue Act comprised in administration related things. Therefore, it is important for us to know, learn the basics, at least the basics of tax administration. Now, in order the tax administrator to administrate the income tax law, the tax administrator is in the Revenue Department. For them to administrate the income tax law, they need various information. They need to gather information. Now, to facilitate the information gathering facility, they have introduced section number 123 into the Act. If you'll see section 123, it gives the authority for the IRD tax officials to gather information. Now, when we take this information, we know there are altogether 7 positions with the IRD. 7 positions are there. Out of these 7 positions, the lowest position is the Assistant Commissioner. The highest position is the Commissioner General. Now, for the lowest position, some lower authority is there. For the highest position, the entire authority is given by the law. Now, keeping that in mind, we'll see the section 123. notice to obtain information. Assistant Commissioner may require from a taxpayer. An Assistant Commissioner may require from a taxpayer. Or the Commissioner is a higher position. A Commissioner may require from any other person by giving reasonable notice in writing or in electronic means, ask various information. Now see, the Assistant Commissioner can't ask information from anybody other than a taxpayer. Assistant Commissioner can ask information only from a taxpayer, not from banks, not from any other person. But if they want information from a person beyond the taxpayer, a commissioner has to write that. Either in writing or in electronic means, they can inform some other person or a taxpayer to provide information. One, what type of things? To furnish any information. To furnish any information. Then to appear at a specified time and a location to give information. Then number 3, to produce the documents, whatever the documents relevant. That means three openings are there. First one, I have underlined for easy understanding, to furnish various information. It won't say documents, it says information. Then the second thing, to appear for a meeting. To appear for a meeting. Then the third one, to produce documents. In that specifically it says documents. Right. Then the commissioner may require a bank. Assistant commissioners can't write to the banks. A commissioner has to write to a bank if they want to get certain information. To get what? To furnish detailed or bank statements. Certain details or bank statement. Number 2, to permit the commissioner or assistant commissioner to inspect records of the banks. Number 3, to furnish schedule of interest paid with details annually. Under this, now they are submitting information annually in a specified format given by the Commissioner General. That day also I covered a little bit here, but I'll run through those things. The provisions in number 1 above shall extend to the furnishing of information, production of documents, and giving evidence to the commissioner or assistant commissioner in relation to the payment of income by a person to a non-resident person. The payment of income, whose income? A non-resident person's income. I pay something to a non-resident person. Right? Or the payment of remuneration by employer to an employee. This is employer's responsibility. When an employer pays remuneration, employer is supposed to give this information. The commissioner or assistant commissioner may make copies of books of accounts or other documents that are produced. Sorry. Is there any issue or any? Am I audible or not?
We can hear you, sir.
All right. Okay. Then I'll continue. The commissioner or assistant commissioner may make copies of books of accounts Now the tax officials can make records of these books of accounts, make copies that are produced for those purposes, or may retain them. Either they can copy down or they can retain those things. Where such course of action appears to the Commissioner General to be necessary. If it is required, only they should do that. For any prosecution or substantiation of an assessment. For that purpose, they can either make copies or retain documents or information. Number 5, this section 123 shall have effect subject to section 122(8). Subject to section 122(8). But notwithstanding anything contrary in any written law relating to confidentiality, privilege, or public interest with respect to the production of or assess the documents or other evidence, including a law relating to bank secrecy and any contractual duty of the confidentiality. By reading this, indirectly what it says, Ill Revenue Act supersede some of these other laws. Right. Then the Commissioner General for that we can refer section 138. The Commissioner General may obtain information from Commissioner General of Elections. The Registrar General of Companies shall provide information to the Commissioner General once in every 6 months. Right. Then following persons shall provide on regular basis in electronic format information on financial transactions or access to such records at their custody as prescribed by the Commissioner General. To whom? To the Registrar General of the Registrar General's Department, to the Registrar General of Companies, following persons by the Registrar General of the Registrar General's Department, by the Registrar General of Companies, by the Commissioner General of Motor Traffic, by an officer of any other governmental institution in charge of granting contracts for the supply of goods, works, consulting or non-consulting services, a financial institution, a stock exchange, any other person, or a governmental institution as may be prescribed by regulations. Right. Then we'll see under what circumstances a return of income not required. That is also important. Not nowadays, this is very important because government issued a gazette notification in 2023 May requiring any individual who is above 18 years should get a TIN number. Now, as per the statistics, in Sri Lanka, almost about 17.2 million 18 plus people are there, individuals. Then in future, we'll be having more than 17 million individual TIN numbers. Already, I heard that the IRD is saying already they have registered more than 10 million. That means they have taken this information from mainly from Election Commissioner's Department and open this TIN. They keep on opening TIN numbers. Right. Now, then, as all these individuals now gradually getting TIN numbers, are they to file returns? Now, this is a very common question. So many people are asking, so many people are really upset about this. Right? Even a farmer in a very remote area who's not dealing with any type of communications, even has to open a tin. Right. Therefore, we'll see this question is very much relevant. Now we'll see the requirement of filing a return. That is covered under section 94. In the case of a resident individual, now we are listing the non-requirement of filing a return. Who need not to file a return? One person is, in the case of an individual category, out of the individual, any individual who has no tax payable, under section 21A. 21A. If there's no tax payable under section 21A, you need not to file a return. There's no mandatory requirement. Then, here the wording what they have given in section 94, who has no tax payable under section 21A. But if you see section 21A, the wordings are different. As I mentioned, there are more than 100 errors in our tax law. Loopholes, errors are there. So many errors are there. This is one error. Section 94 says, who has no tax payable under 21A. But 21A, the wording is persons who has no taxable income. 21A talks about the persons who has no taxable income, not tax payable. Two different meanings. Taxable income. The other place it says tax payable. See the errors. Now we have pointed out these errors. Now we are pointing out these errors from 2018 up to now. Nothing happened. Right. It's totally mistake, no? Then, right. Anyway, if you don't have tax payable under 21A, you need not to file a return as for this. Then the second thing, whose entire taxable income for a period prior to 1st April 2019 comprised with employment income subject to withholding tax. This was there only up to 19. Subsequently, they amended this. Now, amended situation we will see separately. This ending date is inserted by the Amendment Act number 10 of 2021. That is also indirectly an error. They amended that not in a proper way. Right. Then number 2. In the case of a non-resident person, earlier one resident individual. Now here non-resident person. When we say person, it includes individuals as well as entities. Who has no tax payable for the year under 21A. Again, no tax payable for the year under 21A. Any entity, any non-resident person, maybe individual or entity, who has no tax payable under 21A of our law, need not to file a return. That is what it says. It may be more appropriate, what I am saying, these errors, more appropriate of stating that an individual who doesn't have a tax file, need not to file an income tax return. Only if he is not having taxable income for that year of assessment. That should be the wording, but it wrongly worded. Further, why an individual who doesn't have a tax file, and the sole income comprised with income on which the final withholding tax is deducted is not excluded. That is another error. they have not excluded that. That is an error in the law. Number 3, an individual, whether resident or non-resident, whose tax payable for a year of assessment under 21A relates exclusively to the income of employment. This is that amendment, newly added part, employment income, which is subjected to APIT. That means APIT has been duly deducted under section 83A, that is after the amendment. And no tax shall be payable under 82(2)B and C. On that means there's no self-assessment tax to be paid because his sole income is employment income on which the withholding tax called APIT is deducted. And capital gain tax or an IRD assessment, if there aren't anything, he need not to file the return. However, the Commissioner General may serve a written notice requiring a person to file a return. Even this says that you need not to file a return. Commissioner General can issue a notice to any person asking that person to file a return. As a result of issuing Gazette Notice number 2334/21 of 31st May 2023, requiring specified persons to obtain, specified persons including even 18 plus people. In further, the Commissioner General might act on this power. Right. Further, even though a person, we'll say employee, is not required to. Now, employees, suppose entire salaries, that if that person is having only employment income on which the APIT has been duly deducted. No need of filing a return, no, according to this number 3. Even then, he may elect to file a return. If he want to, he can file a return. For what? If he ceased employment during the year. If he is ceasing the employment during the year, in that year, this person has to file a return. Or the employer has deducted APIT on his employment income under section 83A. Right? Then, now this employee, if he is ceasing the employment, mandatorily he has to file a return in that year. Even otherwise, if employer has deducted APIT, employee has to file a return. It's a joke actually. But this is may elect. The wording is may elect. That means if he wish to, he can file. Why this first one is needed? Retiring benefits. On the retiring benefits, there may be APIT deducted. That APIT percentage may be a higher percentage. If it is the situation for this employee to get a refund of overpaid tax, this employee has to file a return. Now, are there any questions? Are there any questions? If you have questions, please ask. Right, I'll move forward. Assessments. There are 4 types of assessments under our Inland Revenue Act. There are 4 types of assessments. Assessment. Taksero. What assessment? Number 1, self-assessment. Self-assessment means an assessment issuing by making by the taxpayer himself. I file my own tax return. That means that is my self-assessment return. Right? My self-assessment return. Then that is by the taxpayer, self-assessment. Right? under section 132. Then next, default assessment. Default. With these words itself, you can understand, you can remember what are these things. Self-assessment. Taxpayers' self-assessment. That means it is taxpayers' own assessment. Second one, default assessment. Somebody has defaulted something. As a result of defaulting, somebody is issuing an assessment. Now, default assessment means if the taxpayer defaulted, then IRD can issue a default assessment. As a result, with this word default, when the defaultment is happening, only after 30th November. Until 30th November, they can't issue default assessment because the taxpayer has time till 30th November. They have time till 30th November to file a return. Therefore, before 30th November, IRD can't issue a default assessment. Default occurs only after 30th November. Then the number 3, advance assessment. Advance to something. It is in advance. With the word itself, you can understand. It is in advance. What's the due date of return filing? 30th November. Then advance assessment could be issued only prior to 30th November, not after 30th November, because it has to be in advance of the due date. Then in advance of the due date means before 30th November only by the IRD. Then the next one, amended or additional assessment. Amended. To amend, there should be an earlier assessment. Or additional, there should be an earlier assessment. Therefore, both words are similar. Amend. Previous assessment, whatever the previous assessment, somebody is amending. Amending by whom? Commissioner General, the IRD. That amending may be amending the self-assessment return, or maybe amending the default assessment, or maybe amending an advance assessment. Amending or addition to any of these 3. I think it is clear. Anybody can remember these things the way I explained. With the word in itself, it is easy for you to understand. Right. The 1, 2, and 3, self-assessment, default assessment, advance assessment. All these 3, first 3, treated as original assessments. Those are treated as original assessments. Then now we will take one by one within the manageable time. I'll explain these things. Self-assessments. It is an assessment made by the taxpayer based on the information available. I file my tax return based on the information available. A self-assessment taxpayer who has filed a self-assessment return, in the approved form in respect of tax period shall be treated as having assessed income tax payable as set out in the return for that applicable period. Right. I do my own return. That is what it says. Right. Then I should file on or before 30th November of the immediate subsequent year of assessment. If the taxpayer has a loss, even there's a loss, I have to file a return to record the loss. Having make an assessment, recording the loss. Next, default assessments. What is default? As I mentioned, default. Taxpayer has defaulted something. As a result, defaulted what? filing of tax return. Taxpayer has defaulted the filing of tax return. As the taxpayer defaulted the filing of tax return, IRD can issue an assessment. If a taxpayer has failed to file a tax return for a period on or before the due date, to collect the tax by assessment, Assistant Commissioner may assess tax payable for that period based on the available evidence, and to the best of his judgment can raise after the due date of filing tax return. After the due date of filing tax return. Issuing to a defaulter. This is issuing to a defaulter. That means to make him a defaulter, 30th November has to be passed. Until that time, that person is not a defaulter. Even after 30th November, if he has not filed a return, he is a defaulter, then IRD can issue a default assessment. Basically, this assessment, commonly, there are mandatory information. What are the mandatory information? Amount of tax assessed. IRD is assessing, then amount of tax assessed. Not covered the taxable income assessed. Now here in this, there is also a mistake. Actually, they should start with amount of taxable income or assessable income, taxable income, and all those parts are missing. Started directly from the tax amount. It's a mistake in the law. Then amount assessed as penalty in respect of tax assessed. Amount assessed as a penalty in respect of tax assessed. Amount assessed as a penalty. Then that means in addition to the tax amount, IRD is assessing penalties also if needed. Amount of late payment interest. Now under the Inland Revenue Act, for all late payment, there's a interest of 1.5% per month. Now here, that is also the assessor can, the person who is assessing can assess that also. Then relevant tax period. Obviously, any assessment, there should be a tax period. Due date for payment of tax, penalty and interest. Should advise the due date of the tax. Tax includes the basic tax, penalty and interest, all three. Then the manner of objecting the assessment. Manner of objecting, how to object. Now see, I have extracted these things from section 133. Now see the error in this list. Error in the list. The default assessment notice shall specify the following. What about the taxpayer's TIN number? What about the taxpayer's name? Those are missing. Now in this listing, the name and the name, address, and the TIN number, all those are missing. Now see, these are errors in the tax law. That's why I am always reading 100 odd errors are there in our tax law. They are missing. Those are the most important things. Not only the year of assessment. To whom we are raising the assessment? What's his identification, the TIN? To which address we are delivering it? Those are not there. Therefore, in this, that is, those errors are there. Right. Then a default assessment shall not change the due date for payment. Any of these assessments do not change the due date of tax payment. Due date of tax payment is nobody can change. Nobody, even the Commissioner General can't change. of payment of tax under the assessment and late payment interest. And the late payment penalty shall remain payable based on the original due date. Those are fixed. Right? Especially interest, now the payment side, you can't change the dates. Right? A default assessment shall not change the due date. Then the shall not change the penalty. Due date and the penalty. Right? Under due date, there are two things. Due date of payment of tax, due date of payment of interest. And the due date, the late payment penalty shall remain payable. Even after issuing a default assessment, the requirement of filing the tax return remains as it is. Now, I didn't file my tax return by 30th November. By 15th of December, IRD raised an assessment calling default assessment. I defaulted, therefore they are issuing an assessment which is default assessment. Even IRD issued a default assessment. Still, I have to file my return. But thereafter, when I file a return, that return, even it is a self-assessment, for legal purposes, it is not considered as self-assessment. After issuing the default assessment, if I'll file the return, I have to file the return, but that return legally won't consider as self-assessment return. Understood? That means whatever the rights available for a self-assessment return won't be there in that case. A default assessment may be made at any time after the return due date. As I explained, after the 30th November, at any time it might issue. Are there any questions? Are there any questions? Are there any questions? Right. If there aren't any questions, I'll move to the next heading. Advance assessment. In advance, that means advance assessment could be raised only prior to 30th November, not after 30th November, in advance. If the taxpayer has failed, if a taxpayer has not filed a return, now, under the current situation, even today I can file my return for 24-25. Right? 14th of October. If I have not filed the return today, up to date, then IRD can issue an advance assessment. Suppose I file my return today for 24-25. Tomorrow, IRD can't issue an advance assessment because I have already filed my return. Then it is not advance. Right? If the taxpayer has not filed a return, but the tax is collected by assessment, maybe withholding tax even, the assistant commissioner may issue an advance assessment before the due date of the taxpayer's tax return. But before issuing advance assessment, that tax officer has to check whether this taxpayer has already filed the return. If the taxpayer has already filed the return, the assistant commissioner can't issue an advance assessment. Right. Now, the advance assessment notice shall specify the following. Even in this, you can see same type of errors are there. Taxpayer's name, taxpayer's TIN number, taxpayer's address is missing in this listing. This is another error. The advance assessment notice shall specify. These are the minimum information, shall specify. Under the minimum information, definitely the name, PIN number, and the address has to be there. No, it's missing. What are the information? Amount of tax assessed. Again, assessable income, taxable income, that part is missing. Only the tax. Penalty assessed. Relevant tax period. Now here, no interest. Interest is also missing. Now earlier one, in addition to the penalty, interest clause also there. That is also missing in this. Relevant tax period, due date of payment of tax and penalty, the manner of objecting the assessment. Even if an advance assessment is made, even the advance assessment, even I receive an advance assessment, still I have to file my annual return. The taxpayer is not relieved from requirement of filing tax return. Still, I have to file the tax return. But the problem, if I file a tax return after receiving this advance assessment, that tax return is not recognized as a self-assessment return. In a way, it is not correct, but that is how it is. Assistant Commissioner may specify that the tax and the penalty due shall be payable immediately. A tax return filed by the taxpayer after an advance assessment, it is not treated as a self-assessment return. It's very unfair because I had enough time to file a return. And the IRD jumped the gun and issue an advance assessment. Why I am getting penalized with that? It is very wrong. A violation of my right. It's a violation of my right. Anyway, that is there. In the law, that is there. It's violation of my right. Then now we'll see the last category of assessment. Amended or additional assessment. Amended or additional assessment. To issue an amended or additional assessment, there should be a prior assessment. Without a prior assessment, IRD can't issue an amended or additional assessment. Right? They can't issue amended or additional assessment. Assistant Commissioner may amend an original assessment of a taxpayer based on such evidence available and to the best of his judgment to ensure certain things. Not by the taxpayer, it is by the Assistant Commissioner. To ensure the taxpayer is assessed on the correct amount of carried forward loss. First part is with related loss, to record the correct loss. And the taxpayer is liable for the correct amount of tax payable. To give the tax liability, on the correct amount of tax, including a nil amount, right? To ensure these two, to ensure the correct loss or to ensure the correct tax liability, Assistant Commissioner can issue an amended or additional assessment based on the information available. Now, even in this similar type of error is there, something is missing. The amended additional assessment notice shall specify following. In this specification listing, Name, address, and the TIN is missing. Relevant tax period, okay. The reference to the original assessment, yes, we have to refer to the original assessment to which the amended assessment relates. The amount of tax assessed and the basis of amended or additional assessment. Not covered, the taxable income assessed. Taxable income, assessable income, those are missing. Any penalty assessed, any late payment interest assessed, due date of payment of tax, penalty and interest, not later than 30 days of the notice. Now always they should give within 30 days of this assessment you are supposed to pay. The manner of objecting the assessment. Those information are there, are required. Mandatory information are required. Now, when we see all these things repeatedly, we can see that the errors in the law. Always, everywhere there are errors in the law. That means basically it is the legislators' ignorance. Legislator was not sure what to do. Right? That is what has happened. And lack of knowledge. But in Sri Lanka, anything which is put into the parliament is getting approved because those people, the majority of the MPs are also clueless. And as a result, whatever the document put in by the legal draftman is getting approved, only the objections will be the public objections. If there aren't any public objections, normally in Sri Lanka, everything gets legalized. Luckily, the public objection opening is there. Right. Time restrictions may apply to making an amended or additional assessment depending on the circumstances. There are certain limitations. However, in the case of fraud, gross or willful neglect, fraud, gross or willful neglect, right? By or on behalf of the taxpayer, an original assessment can be amended at any time. They can amend at any time original assessment. Now we'll see the time bars. Now we'll see the time bars of amending. That is also very much important. Time bars. Now this is also very important. Time bars of amending or issuing additional assessment. In the case of self-assessment, within 2.5 years from the date of filing self-assessment return. Self-assessment return. This is governed under section 135, right? Under section 135, which gives the time bar provisions and the making assessments. Section 135 gives the assessment time period. Yeah. That is section 135, subsection 2 gives these limits. If it is, if the IRD is amending a self-assessment return, they have to issue the new assessment within 2.5 years from the date of filing self-assessment return. Keep in mind, it is not from 30th November. It is not from 30th November. Date of filing. I know a lot of people, they have misunderstood this section. They say within 30 days from, within 2.5 years from 30th November. That is wrong. Then number 2, any other assessment within 2.5 years from the date of service in the assessment by the Assistant Commissioner. Now we said that there are 4 types of assessment: self-assessment, advanced assessment, default assessment, and additional or amended assessment. Altogether 4. Out of 4, first one, self-assessment, the time bar of assessing against and self-assessment is 2.5 years of filing the self-assessment return. In the case of any other assessment, within 2.5 years from the date of service in the assessment by the Assistant Commissioner. Now, see, how unfair is it? Now, we know tax officials are public servants. They are public servants. They should give the service to the public. They are depending on public money. Their remuneration is paid by public money, right? They should give the services to the general public. But see what, how unfair is it? Now, after 2.5 years, we'll say, no, closer to 2.5 years, they raise an assessment. Then they can raise an additional assessment, amended assessment, again within another 2.5 years. Is it fair? It is very unfair. After noticing this error, subsequently some of these things have been changed. Under section 135, 3 capital A, it is up to a certain level, it is changed, right? Assistant Commissioner may further amend an amended assessment. He can amend his own assessment as follows: whichever period ends later, 135.3 and 135.3a. Here, the Assistant Commissioner can't amend the original assessment. This section, this bullet is for amending the amended assessment. Right. Now, this time periods, as for this, it is changed. For the year of assessment 18-19 to 22-23, this was the situation. Then 23-24 onward, this is the situation. Right? Earlier, this is the situation. Now, this is the situation. Right. From 18-19 to 22-23, within 4 years, that means this related to this item, further amending. At that time, further amending, they had 4 years of filing the self-assessment return by the taxpayer, or within 4 years from servicing the original assessment. Keep in mind, now this part comes under this heading, further amendment, right? Further amendment. For your easy understanding, I will put that again. Further amending, further amend. That further amend year of assessment is right. Okay. Otherwise, you might misunderstand it. Further amend year of assessment 18-19 to 22-23. This was the rule. Then 23-24 onward, this is the rule. Now, earlier, they got another 4 years time to amend again. But this 4 years, there are three conditions: 4 years from the self-assessment return filing, or within 4 years from servicing the original assessment by the Assistant Commissioner. Now see, taxpayer has filed the return. Within 4 years, Assistant Commissioner can issue assessment. Again, they can issue an amended assessment. 1 year from the date of service in the notice of assessment by the Assistant Commissioner. Right. Here, the Assistant Commissioner is restricted to amend the alterations or additions made in the amended return assessment to the original assessment. This implies that if the original assessment has not been amended, or an additional assessment has not been made within 2.5 years, yeah, for the original one, 2.5 years is there, no? If that within 2.5 years it is not amended, what's happening? A further amended or additional assessment cannot be made. Cannot be made. I change this a bit. I will share you the change document by tomorrow. Okay? Then further amend. Year of assessment 23-24 onward. Luckily, this period of 4 years reduced to 2.5 years to make it a little bit fair. Further amend year of assessment 23-24 onwards. Now Part A, Part B. Part A1, this is after my amendment. Part A1, in the case of self-assessment, within 2.5 years from the date of filing the self-assessment return. If the Assistant Commissioner want to amend a self-assessment return, within 2.5 years from the date of filing the self-assessment return, or in any other assessment, that is default, advance, amended, or additional assessment, within 2.5 years from the date of servicing the assessment by the Assistant Commissioner. By the Assistant Commissioner. Actually, we can't say further amend, no? Amending, yeah. Further word is not much matching. Yeah. Then, luckily now, if the Assistant Commissioner want to amend it, from the self-assessment return 2.5 years, he has to make the assessment, or it is any other assessment, then within 2.5 years from the date of service in the earlier assessment, period of 1 year after, that is also important. Serve the amended assessment, right? That is also important. Right. Are there any questions up to now?
I need one clarification. Can you hear me?
Sure, sure.
Yeah, if we go to advanced assessments in the yeah, please.
Okay. Oh, sorry. Where is the document? Yeah. You can see the document, no? Right. Okay,
Yeah.
advanced assessment.
Yeah, but our documents in the screen is not moving. Right, okay. Advanced assessment. In the advanced assessment.
Is it? Yeah.
Yeah.
Can you see
Advanced,
this advanced assessment note?
yes, we can.
Yeah, okay. What's the
Yeah, in
question?
the advanced assessment, what I understood is the assessment issued in advance, as you said. But
Correct.
if we are receiving an in advance assessment, how the penalties involved in that? Because we are as I understood, Inner Revenue is trying to get some money in advance. So then, how this penalty is involved? Can you please explain?
Actually, it's a very good question. Yeah, because in this advanced assessment section 134, in this list, the shall specify penalty. What you are saying, why there's a penalty? Penalty is on what? Violating the law.
Yeah,
Penalty is for violating the law.
yeah.
That means they can charge penalty on some other violation. Some other violation, they can charge a penalty. Therefore, even in advanced assessment, there can be situations where the IRD is in a position to charge certain penalties. Now, in certain cases, there may be penalties of, now we'll say, the certain withholding taxes. Now, as an example, under the current situation, suppose I am working for an overseas employer. My employer is in abroad. I am working from Sri Lanka. Then, by violating the general principles of withholding tax, IRD Commissioner General introduced another table, table number 8, into the APIT tables. He introduced a new table to the APIT tables, table number 8. This table number 8 is against the withholding tax concepts. Totally against. But violating the accepted norms, he included it. Why? What has happened? Withholding tax to be deducted by the person who is making a payment. Now, in this case, my employer is in abroad. Sri Lanka government can't influence the overseas employer to deduct APIT from my salary. As a result, what the Commissioner General came with a nice idea. Principal can't take the money from the employer. Therefore, introduce a new table, table number 8, asking the recipient to pay that withholding tax. They're totally against the withholding tax principles. But what to do in Sri Lanka, this type of things are happening. That means it is beyond the authority. The Commissioner General has violated his authority. He has gone beyond the authority. Now, anyway, now the table is published in the IRD website, published. Then in 2018, there's a gazette notification legalizing the payee table or APIT table published in the government, published in the IRD website. Now these tables are there in the website. Whether it is legal? Yes, it is legal. Why? In 2018, I think 31st March 2018, I can't remember the exact date, issued a gazette notification by the Commissioner General legalizing the tables publishing in the IRD website is a law. Now, with that clause, he is putting new tables into the website. No sooner he put something into the website of table, pay table, it is legally valid. Now, ultimately, this table 8 is also now legally valid. Beyond the authority, ultra-virus thing, but it is legally valid because of that gazette notification. Now, in this case, suppose I am working for an overseas employer, I'm supposed to pay tax monthly. By applying table 8, I'm supposed to pay tax monthly. Suppose I have not paid taxes monthly. No sooner 31st March is passed, suppose IRD issue an assessment called advance assessment. Now IRD, I didn't pay, I didn't apply table 8 and paid tax on that. Now, after 31st March, but before 30th November, IRD raised an assessment. It is advance assessment. Now, in that advance assessment, IRD can put penalty on my violation of the law. Understood? I violated the law. I didn't apply table 8. As a result, I have violated the law. Then IRD can charge me penalty. There may be certain other violations also. This is one example, a simple example I took. Therefore, there can be certain remote situation where the penalty could be levied. Is it clear?
Yeah, it's very much clear. Thank you.
Yeah, if there are any other questions, please ask. I have time. Please ask questions. Now, luckily you asked that question. Now it is, then only I explain it. Now it is clear to everybody. Please ask questions. Sorry. Are there any other questions? As I was talking about this time bar provisions, 2 days back, or yesterday actually, I faced at the Tax Appeal Commission.
Your voice is fading for us.
Regarding one of my clients' case, I participated for a Tax Appeal Commission case. Now, this particular I think this rainy situation, there are some issues.
Yeah,
Can you hear me?
your voice is, I mean, we can hear your voice, but time to time it's fading.
Yeah. Anyway, I changed from dialogue connection to the SLT connection. We'll see. We'll try. Right. Now, in this case, the assessment was with relate to 2019-20 year. 1920 time bar expired on 31st May 2023. 1920 from 20th the year 2020 November, 2.5 years, ended up by 31st May 2023. IRD has issued an assessment after delaying another 14 months. Issued an assessment in July 24. That is very much delayed. Then what we did, I appealed to the IRD some time back, saying that it is time barred. But as usual, now the situation at IRD is almost 90% of the cases, they are blindly finalizing by confirming the assessment. I heard that this is happening because they are getting the incentive on that. I don't know whether it is correct. That is what I heard. Nowadays, when we appeal to the IRD, almost 90% sure that they confirm the assessment. There should be a reason, but some people says that they are getting the group incentive no sooner they confirm the assessment. Anyway, we have to find out that. That is what I have heard. Right. Anyway, they finalize the assessment. Then we appeal to the Tax Appeal Commission. Yesterday was the second day of the Tax Appeal Commission. At the second day, the panel asked me my objections. I said, my primary I have only one objection. That is the primary objection, that the assessment is not valid because it is time barred. I said it is time barred, therefore no need of digging into the other things. What we have to see, what the panel should decide, whether it is time barred or not. If the panel says that it is time barred, I said, if the panel says that it is decided that it is time barred, then there's an opening for the IRD to prove their assessment by saying willful default or willful neglect. Willful neglect. Right. I said there's an opening like this. Therefore, first we have to decide whether it is time barred or not. Even it is time barred, IRD has a chance. They can prove, if they are capable enough, they have to prove that it is willful evasion or negligence. Then when I said like that, panel accepted that, and panel asked the IRD officer who participated for this. He said, no, we can't say time bar. Time bar is not relevant because some taxes they have not correctly calculated. Not correctly calculated mean these are willful evasions or willful neglect. I said, oh, then they were saying that no, time bar is not applicable. What the use of time bar? And so many cock stories as usual. Then I allowed them to talk as much as possible. At the end, I said, I totally object this. And I said, what the use of, why the legislator made to include a time bar provision into the law? I said, what made the legislator to include the time bar provision into the law? If IRD is arguing for anything, that it is not time bar, it is willful evasion or willful neglect. Why? What made the legislator to include this type of a time bar? I said, there's a reason. It is government servants should give their services to the general public. They are depending on government money, the general public's money. Then they should give the service to the general public. To give this service of this particular tax return, isn't 2.5 years sufficient for that or not? I asked whether 2.5 years is not sufficient for them to defray their work. I said, if they can't work within 2.5 years, that means if even after not doing the work within 2.5 years, they slipped for 2.5 years on the assessment. Now, suddenly they woke up and saying that it is not time bar. I said it is totally unfair. We have to see why the legislator made to include a time bar. And I totally objected that. And I know the panel very well taken my argument, very well taken, along with the judges, those legal officers. I'm sure they took it very well. Because this cock stories, as usual, IRD officers come and tell something. But that don't help, because always we have to see reason for these things. Right. Then I argued like that. Then ultimately panel asked me, now the department person asked time another date. Then the panel asked me whether I have any objection of giving another date. I said, no, not at all, because we better give a date for them to prove that it is willful evasion or willful neglect. They have to prove that, no? As they are not capable enough of proving that today, I don't mind, I do not object of giving another date. I said like that. Then they gave another date. I have to see on that day what will happen. Now, why? Now, suppose there's no validity of the time bar. What made the legislature to include a time bar? Is useless, no? He could have to wait without including that section. There should be a reason of including. Now, we shouldn't discourage government servants working on time. If we'll allow like that, what will happen? They will never work. They will sleep as much as possible and just raise assessments, harass the taxpayers. That's what's practically, that is what's happening. No? I objected like that. Anyway, we'll see in future what will happen. Right. Are there any questions? Do you have any different ideas on that? Do you have any different ideas on that? Whether my argument is fair or not fair? What's your idea?
In such a situation, can Inland Revenue withdraw their case?
They have only one option. No. Now the judges panel should decide whether it is time barred or not. Obviously, it is time barred, right? They can't say that it is not time barred. No sooner they decided that it is time barred, IRD has an option. They have another opportunity. What is the opportunity? Under section 135, subsection 2, they can say, they can prove that it is willful evasion or willful negligence. Willful negligence, not normal. It is, the law says, in the case of a fraud or gross or willful neglect, they have to prove one of these things, willful neglect. How can they prove that it is willful neglect? This taxpayer has filed the return on time by giving all information. He has paid all taxes. After sleeping for not 2.5 years, almost 3.5 years, suddenly the tax officer has got up and raised an assessment. How can he prove that the taxpayer has done a willful neglect? Very difficult, because they have to prove. That they have to prove. Proving that is not practical. They can just tell something as stories, they can tell. But we are objecting, then they can't prove it. If they fail to prove it, obviously the Tax Appeal Commission has to give the determination in our favor. No sooner we get the determination in our favor, at least 80% of the cases, IRD go to the courts to harass the taxpayer. Their objective is to harass the taxpayer because there's no cost for them. Appealing to the tax appeal courts, no cost. Attorney General is representing. Then to harass these tax consultants and to the taxpayer, they just appeal. I have so many cases like that. They appeal. On the judgment date, they come and withdraw it. That dirty thing is generally happening at that level. They might do that. Ultimately, that might happen. That will be the situation. But what to do? This bad situation is there, is regularly happening.
In such a situation, like I mean,
Yeah.
when the judgment has given in favor of you, but still the IRD is appealing. So, but now in the primary level, the judgment is given in favor of you. So, even though it's appealing, isn't it be a case that you have won? Or I mean, it's a suspended case since it's go to the next level and IRD withdrawn.
No, a tax appeal commission is a determination, not a judgment. At the tax appeal commission, it is not a courts, no. Therefore, they can't give judgment. What they are giving is determination. Mataya determination. Then either party who is not satisfied with that determination can go for litigation. First step of litigation is the appeal courts, three bench appeal. Then generally IRD just blindly appeal to the appeal courts because there's no cost to them. But for the taxpayer, huge cost per case, at least 2 million rupees to the courts level, at least 2 million rupees. But for IRD, no cost. Therefore, Attorney General representation is there. They just appeal. Then, after appealing, they know that they can't win. They drag the case as much as possible. They ask dates over dates and delay as much as possible and harass the taxpayer as much as possible. Then judges panel get upset with this. In one day, judges panel might say, decide a date. On this date, we'll be giving the judgment. I had, on the same grounds, I had almost 8 cases on the same ground under the previous Act, Agriculture. For each case, I had 32 cases. Out of that tax appeal commission, we went for about 12 cases. Other things were in pipeline. Out of this 12, almost about 7 or 8 cases, we went to the courts. Not we, IRD went. Each case, until the judgment date, they marked as much as possible time. And on the judgment date, before the judges delivering the judgment is ready. Before reading the judgment, Attorney General representative come and say, Mage seva dayakaya illas karaganwa. Appellant is withdrawing the case. These are civil cases. Appellants can withdraw. There aren't any judgment for any of those cases. It's a dirty thing. But what to do? This is regularly happening. Even even at present, it's the situation. Therefore, we can't stop. Then at last, after 2-3 cases, I thought of filing a case, taking action against the IRD to stop this. But my lawyers advised me not to do that. It is useless, just wasting of money. Therefore, ultimately, I couldn't do that. Now, this is the reason about 15 years back in Sri Lanka, this the government departments and corporations and all, at that time there was a voice that there should be a accountability for all services. I think some of you all can remember. About 15 years back, a lot of politicians were talking about the accountability of these governmental institutions. They say for each service, when they interdepartment services, there should be a value recording. If that is there, this dirty thing won't happen. Now, when IRD take the services of Attorney General's department, there should be a charge rate for that. Attorney General Department should charge a fee to the IRD. As it is not, as there's no system like that in Sri Lanka, all these dirty things are happening. What to do? Right. Anyway, that's that. Right. We'll move forward. Administrative review. How to appeal. Any dissatisfied taxpayer, now assessment, we are receiving the assessment, the taxpayer is not satisfied, therefore taxpayer can send a request for review for the decision. This is also a violating of human right. Under the constitution of the country, we have rights, but see, our right has been grabbed by the Commissioner General. It has given to the Commissioner General. When we now, why it is calling as request for review? Shouldn't be request for review. It should be appeal. But unfortunately, current law, when they legislate the current law, instead of appeal, they use the word request for review. We have to beg and go behind Commissioner General seeking for a relief. Totally wrong, but what to do? Then a request for review should be made to the Commissioner General in writing, not later than 30 days after the taxpayers notified the decision. That means once we receive the assessment within 30 days, we have to appeal to the Commissioner General in writing. Late request may be accepted on reasonable grounds. Suppose I was out of the country or I was sick and all, yes, Commissioner General can give some more time. Shall specify the grounds in my appeal, shall specify the grounds in detail upon which such request for review is made. I had to give the grounds in detail. Commissioner General may grant extension of time for making such requests on reasonable course. Commissioner General shall acknowledge the receipt of every request within 30 days. Suppose I handed over my appeal today, request for review today. From today, now within another 30 days, Commissioner General can acknowledge it. If he'll acknowledge it within 30 days, for all legal purposes, that acknowledgement date is the date for my appeal. If we'll not acknowledge within 30 days, my handing over date is the valid date for appeal. Okay. If the objection is against an assessment where the return was absent, I didn't file my return. As a result, they assess. Now, in a case like that, when I am appealing, before appealing, I have to file that missing return. First, I have to file that and then appeal. Otherwise, my appeal is not valid. And if the rejection reason is missing of annual accounts, audited accounts and all, I have to submit that. Otherwise, it is not valid. Right. On receipt and acknowledgement of the review request, the Commissioner General shall review the assessment or other decision and notify the taxpayer in writing or by electronic means on his decision, along with the reasons of the decisions. Commissioner General shall review that and notify the taxpayer of the decision. The time frame or in the original act for this review, there wasn't a time period. See how unfair. How unfair. There was no time period. Commissioner General was sleeping on that. For years, 5, 6 years, no review. At last, we fed up with this situation. We were objecting. At last, we managed to get the law amended. The time frame of reviewing and informing the decision of the Commissioner General was missing in the original law. However, now this is the amendment. However, if the request is made on or after 8 May 23, any request after 8 May 23, the Commissioner General shall notify his decision within 2 years. Now, May 23, May 25, May 25, May 24, May 25. Now 2 years has gone. If there are any appeal what you have handed over in latter part of May 23, now 2 years have passed. If now IRD gives a determination, that is totally invalid. And if so, such notification is given, the request to be treated as allowed. Please see, now we are in October. If you have handed over any of the appeal within the period 8 May 23 to 14th October 23, we'll say, 14th October 23, by now 2 years past. If they have not given the determination, your appeal is well accepted. Keep a track on that. Request shall be considered by an officer other than the officer who made the assessment or decision. Now, this is also error in the law. Now, see, request shall be considered by an officer other than the officer who made the assessment or decision. Now, what has happened? I have some cases in one division of the department, assistant commissioner has issued the assessment. Another assistant commissioner of the same division has been appointed to review it. Both these officers are working under the same commissioner. Under the same commissioner, two officers, one assistant commissioner has read the assessment, another officer under the same officer is reviewing. Ultimately, they got together, finalize the assessment as it is. Maybe for rewards, I don't know. Anyway, right? Now, this dirty thing is again happening with that. Now, because this is due to the errors of the law. At least the law could have to mention an officer other than the officer who made the assessment, the officer other than officer who, another officer under another commission. That part could have to include into the law. That is missing. Now see, these are creating a lot of issues because I personally face this issue. Personally, I face this issue. Then the Commissioner General is required to give, actually this, in this case, when both officers are working under the same officer, same senior officer, where the independence? No independency. Assessing officer, assistant commissioner has consulted the commissioner and raised it. Here in assistant commissioner also consulting the same commissioner and taking a decision. Where the independency? No independency. Error in the law. Commissioner General is required to give the decision by making an amendment assessment, making an amended assessment, or an additional assessment within the time limits given in section 135, confirming the assessment or taking such other necessary action. Commissioner General is required to give the decision by making an amended. Ultimately what they can do? They can either raise a new amended assessment or additional assessment, or confirm the previous assessment, or take in any other action. The any other word is also there. Then Commissioner General shall maintain the record of the evidence of the review hearing. They have to maintain, because when we appeal to the Tax Appeal Commission, they have to give that case stated. When we appeal to the, either party appeal to the courts, should give this case stated. For that, Commissioner General or his subordinate officer should maintain all these information. Are there any questions? Are there any questions?
So is there any difference? What is the difference between review and appeal?
Now, appeal, now when we use the word appeal, the taxpayer is in a better position. Request for review mean we are requesting the Commissioner General. Why do we need to request? It is not fair, no? Why do we need to request? We should appeal. But unfortunately, this this Inland Revenue Act used the word request. There's a big difference between these two. You are requesting something. The other one, you are appealing. You go against that. The other one, you are requesting. You are wicked, you are in a bad wicket. That is what's happened. Actually, all these things, we discourage the government employees to work. That is what's happening by using this type of words. Yeah, are there any other questions?
So excuse me.
Yeah, please.
When we are making any appeal, is there any necessity that we should pay at least a part of the tax in default before the decision is given? I have heard it not clear, but
No, actually, as per the law, you are supposed to pay the full assessed amount and send a request for review. As per the law, if you'll see the law, it implies that you have to pay the entire tax. Then only you can go to the Tax Appeal Commission. You can send a request for review. But it is not fair, no? It is totally unfair. As a result, even the law implies that you have to pay. Nobody is paying. Even the IRD has recognized that it is unfair. Therefore, they are also not disturbing. Therefore, in my history of 50 years, I have never paid money and instructed our clients to pay money and appeal. That has never happened. Even at present, we are not doing that.
so that means are we supposed to inform them that we are take some
always in our appeal, always in our request for review, last sentence is that always we write until determination of the appeal, we write like that. Until the determination of the appeal, please refrain from charging any tax, penalty or interest. We write that. Or we write, until the determination of the appeal, please do not take any recovery action against the assessment. That statement has to be there.
Is it common to appeal to Commissioner General or even beyond that, Court of Appeal? This thing is same.
Court of
Appeal, Tax Appeal Commission.
At the IRD level, you have to write that. But when you are appealing to the Tax Appeal Commission, you have to deposit either 25% or 10%. You have option. If it is 25%, you have to deposit 25% as a refundable deposit, or you have to deposit 10% of the total tax amount. Total mean tax, penalty and interest, total amount. 10% if you deposit, it is a non-refundable thing. Even you win the case, that goes to the government. Therefore, in my history or in my case, I never encourage clients to deposit 10%. Always we encourage them to deposit 25%. Even this 25%, you need not to physically deposit. You can get a bank guarantee for that and give the bank guarantee in favor of the Tax Appeals Commission. Normally 1 year bank guarantee equivalent to 25% of the total tax amount. Is it clear?
Clear, sir.
Right. Next, appealing from the administrative review to the tax appeal commission, that means at the tax administrator level, if you fail, that's a usual thing, no? At least 80% nowadays you are failing. This is a review independent from the tax administrator. Then the tax administrator commissioner general doesn't have any influence to the tax appeal commission. Tax appeal commission covers the taxes administered by commissioner general as well as director general of customs. Both they are handling. A person aggrieved by the decision of the administrative review may appeal in writing to the tax appeals commission with a copy to the commissioner general within 30 days of the commissioner general's decision. Within 30 days, you have to appeal. Extended time for appealing may be granted on valid grounds. Then requirements to appeal. You can appeal by there are some requirements. First, number one, this is a mandatory, a written request for administrative review has first been made. Without appealing to the commissioner general, you can't directly go to the tax appeal commission. First, it is mandatory that you has to go to the tax commissioner general. If you've not done that, that's the end. And number two, there are an option. Number two, under two, there are two options. You can select one you wish. A decision has been received from the commissioner general. If you get a decision from the commissioner general, within 30 days, you can appeal to the tax appeal commission. Or the other option. 7 days have lapsed since the request for administrative review made. Even you have not received a decision from the commissioner general, if the application has got 7 years old to the commissioner general, then without waiting the commissioner general decision, if you want to go to you can go to the tax appeal commission. In my history, I have never encouraged any of my clients to follow this 7-month story. I always ask them to wait until the commissioner general give the determination, because otherwise it's not fair. Then the tax appeal commission, at the end, tax appeal commission hear these things. It's like a Sama Mandala. They hear it and give the determination. Their determination may be reducing the tax amount, increasing the tax amount, or confirming the assessed amount, or annul the assessment, cancel the assessment. There are 4 options what they can do. They can take one of these 4. The burden of proof. Now, when we are appealing to the tax appeal commission, the burden of proof shall be with the taxpayer. If I appeal, I have to prove that. Or the person making an objection to the object assessment to show that the assessment is incorrect. That's what yesterday in that case, I said, assessment is wrong because it is time bound. I proved that. Then the appeal to the tax appeal commission do not suspend the collection of tax. Even now, as per the law, this is there. Just because you appeal to the tax appeal commission, it does not suspend the collection of tax. Still, IRB can take recovery action. Luckily, they are not doing that. But if they want to, they can do that. It is very unfair. Both these are very unfair. That's why I put question marks. Then next, tax appeal commission may require the appellant to furnish security for payment of tax. As I explained, either 10% non-refundable payment or a bank guarantee equivalent to 25% of the disputed amount as a refundable deposit. You can select one of these two. Then in addition to that, you have to pay a small fee to the tax appeal commission. 2,500 rupee fee to the tax appeal commission. Are there any questions on this? Are there any questions? Are there any questions? Do you have any questions? Right. Next step, appeal from the decision of the Tax Appeal Commission. Now, Tax Appeal Commission give a determination, not a judgment, determination. Then either party who is dissatisfied with that determination can appeal to the courts. That is why almost 80% of the cases what we are winning at Tax Appeal Commission, IRD appeal to the courts just to harass us. And they give up. At the end, they give up. Either party dissatisfied with the decision of the Tax Appeal Commission may, within 1 month of being notified the decision, file a notice of appeal. This is court's notice of appeal with the Court of Appeal. The appeal to the Court of Appeal shall be made only on question of law. Only on question of law, not on any other things. Question of law. The appealing party shall serve a copy of the notice of appeal to the Tax Appeal Commission. When they are appealing to the courts, a copy should hand over to the Tax Appeal Commission. The Tax Appeal Commission shall provide a written statement of the decision, including summary of the evidence, its finding of the facts, and other conclusions on the point of law. Now then, no sooner the Tax Appeal Commission gets this notice, that is their duty to give a report to the courts. The law is silent to whom it is to be given. It is obvious to the courts. They should give a written statement of their decision, what are the evidence they gathered, and findings, and what was their conclusion. A report where based on this they should file to the courts. Requirement to appeal to the Court of Appeal. What are the requirements? An appeal request has been made to the Tax Appeal Commission. Now see, these 3 steps. Without bypassing first step of appealing to the Commissioner General, you can't go to the Tax Appeal Commission. Without going to the Tax Appeal Commission, you can't go to the 3rd level of appeal courts. Then either, again there's an option, either a decision has been received from Tax Appeal Commission or 90 days has lapsed since the request for review to the Tax Appeal Commission is passed. There are also, even the Tax Appeal Commission, if Tax Appeal Commission has not given the determination, you can go to the courts. But practically, when you appeal to the courts, they refer it back to the Tax Appeal Commission. Therefore, in my case, I have never promoted any of my clients to go to the courts until we get the determination of the Tax Appeal Commission. It is not practical. Are there any questions? Refundable tax amounts. Under section 150, refundable tax amount. Refundable tax amount. Now this section, there are a lot of new improvements. I change a bit here. Where a taxpayer has paid taxes in excess, the assessment and appeal to the refund of within 4 years of the date of payment, the Commissioner General initiate within the specified time period. The Commissioner General shall set off the amount in the following order. If you have overpaid tax, your filing of return means claiming the overpaid tax as well. Once you file the return, obviously it is your claim. Once you claim that amount, Commissioner General, once the Commissioner General finalizes the refund, first he charge against the other assessed and payable liability, interest, late fee, penalties and all. If there are other liability, penalty, interest and all, first they charge from there. Unless the taxpayer objects, retain another amount to cover up the next 6 months tax liability. But for that, we cannot. Then prior to the tax audit of the refund claim, without doing the refund, now earlier to after the audit. Now without audit, at the request of the taxpayer, we can set off 60% of the overpayment against the subsequent period's tax liability. Now we are claiming this 60%. Any balance shall be refunded to the taxpayer after the audit. After the audit. Then newly added parts are there. In the case of a resident taxpayer, the Commissioner General shall make the following refund claim within 3 months of the claim. Within 3 months of the claim. Without an audit, they should refund in these small amount without waiting for the audit. What are these small amounts? In the case of resident taxpayer, maybe individuals or company, no problem. Resident taxpayer. If the claim was lesser than 100,000 for any year of assessment from 1st April 23 to 31st March 24, this was there. But there's an error in this law, some dates problem is there. If the claim is less than 60,000 rupees in any year of assessment prior to 1st April 25, that means again 24-25. That means this date, earlier date should be 24. Otherwise, it is not correct. No, it is not correct. Right. Then, if the claim is less than, now if the claim is less than 180,000 rupees, in a year of assessment commencing on no after 1st April 25. Now, this is applicable for any resident taxpayer. Next, if the taxpayer is a senior citizen resident individual, who is not an installment payer, not an installment like interest withholding tax paid or something like that. Not an installment payer. Following refunds shall be made within 3 months of the claim without the audit. What are the opportunities? 3 time period. For the period from 1st April 23 to 31st March 24, if the refund amount was less than 25,000 rupees per quarter, here per quarter, not year. Earlier one year, this is per quarter. Then but amount is 1/4 of earlier one. Then, if the claim is less than 60,000 in any year of assessment, that means per year of assessment 60,000, or less than 15,000 per quarter, again 1/4 of that. Then prior to 1st April 25, that means 24-25 year. 24-25 year, this 60,000 per year or 15,000 a year per quarter. Then now, if the claim is less than 180,000 in any year of assessment, or 1/4 of that, 45,000 in a quarter, commencing on no after 1st April 25. Now, they got the quarterly amount also, but other people, quarterly basis not there. Now we can get the refunds like this. 60% you can claim, in addition to you can get the refunds. Are there any questions? Are there any questions?
So normally, if they don't make the refund during these given periods, is there any action that as a taxpayer we can take? Normally, that doesn't happen, I think.
That doesn't happen. Yeah, that's true. IRD is not giving. Same thing will happen to this SVAT also. Same thing will happen. We'll wait and see till 15th of January.
Yes.
Ultimately, now definitely the exporters are suffering, and as a countries will suffer. Likewise, these refunds, when these things are there, practically it is not happening.
Yeah.
I have
These
not
are
come
all
across
amount.
anybody who has got refund like this. Now, see, some of these things are effective from 23. Out of our client, there may be at least 1 or 2 person who was in this list. But up to now, I have never come across any person who has got the refund like this. Anyway, we'll wait and see. Certain other important things I just mentioned. This is that cash transaction limitation. All of you all know that in Sri Lanka, now for tax purposes, cash or open check transactions are not acceptable if the amount is exceeding 500,000 rupees. Now, under this section 10(2)(a), under this section, if it disallows the expenses made in cash or open checks, if the single transaction or accumulated payment of a single transaction exceeds 500,000 rupees, paid in one day or during a period relating to one event, then you are not eligible to claim that expenditure as an expenditure for tax purpose. To avoid that, there are 5 ways of doing transaction. Either account pay, check, account pay, bank draft, credit cards, debit cards, or online payment. One of these 5 methods you can follow to overcome this issue. If you make the payment in cash or open check, what will happen? That expenditure is not recognized as a lovable expenditure. Suppose that payment is relating to a capital expenditure, you can't depreciate, you can't claim capital allowances on that capital expenditure. These restrictions are applicable to the computation of any person's income, not only individuals, not only companies, not only partnerships, not only trust, for any person. In certain industries, there may be practical difficulties. I know, especially in these tea bagging companies, then construction industry, subcontracts and all, they are suffering heavily on this limitation. They are suffering heavily. Number 2, securing of government tax policies from the tax administrator. Government realized that our tax administrators are badly disturbing the tax policy. They realize that government tax officials are disturbing the tax policies. They go and do, like they go and try to interfere into the policies also. Now, after noticing this bad thing, they brought this section into the law, section 111 capital A. But ultimately, the wordings what they have used is not strong enough. Therefore, there's no purpose at all. There's no purpose at all. What they have done, they mention the Commissioner General may. The issue says may. If the Commissioner General feel that better to get, okay, obtain opinion or observation of the Treasury Secretary on the underlying tax policy relating to the provisions of the Act or any tax act administered by the Commissioner General for the purpose of interpretation. If the Commissioner General is not sure about the interpretation in the tax law, and if he want to, he can refer it to the Treasury Secretary. But do you think our Commissioner Generals will do that? They will never do that. They may not refer it. They will do whatever they want. They will try to interfere the policymakers' policy. Therefore, there's no purpose of putting this, because as they have used the word may. This is so required to implement, to secure the government policies. However, as it use the word may instead of shall, they have to use the word shall. The expected result may not be achieved. Are there any questions? Are there any questions? This is the time for you to ask questions. Please ask questions. I can give another 4 minutes. Now the time is 9:16, at least by 9:20 better to stop. Do you have any questions? Yeah, do you have any questions?
Sir, regarding refunds, can the taxpayer appeal law can go to courts by if
Right. Silence shows that there's no question. This is the end of my lecturing and the lecturing part. This is the end of my lecturing. Now tomorrow from 7 o'clock to 8 or 7:15 to 8:15, Mr. Saman will take that time 1 hour to finish off his lecturing part. Then thereafter, next 1 year, Mr. Saman, as well as most probably Mr. Gamage also will join. We will have a 1 hour discussion session. But only thing, for a discussion, you all have to discuss. You all have to come with questions as much as possible. Now, if you all have anything to get clarified from the department level, don't be hesitate to ask questions. Please ask those questions tomorrow. Right? Yeah, saying that, I would like to wind up today's session. Are there any other questions? Right. Then we'll meet again by tomorrow,
taxpayer
7 o'clock. Okay. Good night, everybody.
Good night, sir. Thank you.
Good night, everybody.
Thank you.